Good afternoon, everybody. I thank you all for being here. I'd love to welcome Ijeoma, Maya, Brian, and V to the stage to join us. We're going to be talking about policy pain points in the US and beyond.
Yay, pain.
Yes, good, applause. It's going to be a fun panel. Really quickly, I'd just like for all of our panelists to quickly introduce themselves and what they do before we get things started. And Ijeoma, would you like to just kick us off?
Sure. Hi, my name is Ijeoma Okoli. I'm a financial regulatory lawyer and the co-director of the Digital Economy Institute, which is a crypto think tank in London, but focused on UK and US policy.
Hi, everyone. I'm Maya Shofany. I started crypto 2017, worked in the compliance space at Gemini in both Binance US on the institutional side, and now I work at Near Foundation as a regulatory specialist.
I'm Brian Quintenz. I was a commissioner of the Commodity Futures Trading Commission until 2021. Now I'm an outside advisor to A16Z Crypto.
Hi, everyone. I'm V. Lee. I lead regulatory and policy at Bain Capital Crypto. Prior to that, I was at the crypto startup WorldCoin, and before that, I was an attorney at the SEC for about 6 years.
Awesome. So I want to just jump right into what we're talking about, which is pain points. And I think the first question obviously has to be, what are the policy pain points? Where are crypto entities and folks who are working on them running into issues with regulators, not just in the US, but in the UK, in the EU? And Ijeoma, let's just start off with you, and then we'd love to just go down the panel here.
Sure. I think a major pain point is the lack of a comprehensive legal and regulatory framework in all the jurisdictions that Nikhil mentioned, but in most of the world. And I think so it's essentially a question of lack of clarity, so the industry doesn't necessarily know from one day to the next what is legal and what is not necessarily legal. But also, there are issues relating to fraud at times, although in some cases it's overblown, but it's still there. Investor protection issues, the potential for, as the stablecoin market, for example, continues to grow, the potential for financial stability issues. So I think it's the overarching legal and regulatory framework that doesn't exist, which I think is the major pain point.
I would second that as well. I feel like we have a lack of consistency across the board and a bit of ambiguity. So if we look at all the different jurisdictions, a lot of companies in the ecosystem, while they're trying to build, they're trying to maneuver around, like, which law do I need to abide by? What threshold do I need to comply with? And it's very difficult to do at the moment. But we're seeing in the past 6 months a huge shift from the regulatory side, and it's changing immensely. And so let's see what happens the rest of the year.
Yeah, I'd probably build on that, or just maybe say it differently. I think the biggest pain point that I see here in the US is a lack of productive clarity as opposed to the presence of unproductive uncertainty. Uncertainty can be okay, if it allows for innovation to grow and to flourish and to achieve its true potential, and then a well-thought-through regulatory environment or construct is built on top of that to respect it. But that's not what we have right now. We have basically a model that does not fit this technology, it does not fit its promise, and is being threatened across the ecosystem in an unknown way that I think is destroying some of the entrepreneurial and innovator spirit in this country.
Yeah, so I agree with all of that. Uncertainty is a big issue. I mean, I see that now with our portfolio and the companies that we, talk to, and I saw it firsthand when I was at a crypto startup, just deciding, where to launch, where to operate. There was just so much uncertainty here that we ultimately ended up doing it overseas, right, which is a big problem. But I would say more specifically, the biggest policy pain point, at least in the US, is just this unsettled question of, whether something is a security or a commodity, right? I think until that question gets settled, there's just going to continue to be confusion, and it'll stifle innovation.
Well, just jumping into that for a minute, we've seen there's a couple concurrent legislative efforts to, give the CFTC, your former agency, more authority over crypto entities, but they don't really define where that line is. We're just curious, what are your views on where is that line? How can it be defined in such a way that the CFTC and or maybe still the SEC have these primary market regulator roles, but companies don't have to go through many rounds of questions about, all right, so do we have to talk to these guys or to those folks, or how could we define that line? Let's just keep you raised it. Let's start with you again and come back.
Oh, okay.
Yeah, so, I don't know how familiar everyone is with the two major bills that were introduced this year in the Senate. One was introduced in the Senate Agriculture Committee and one in the Senate Banking Committee. And they both, for the most part, hand primary oversight of a lot of crypto and most digital assets to the CFTC. Of course, there's still a lot of ambiguity in the language of both bills as to how you draw the line, meaning if you have a token or a digital asset, when is it considered a commodity and when is it considered a security? The Senate Agriculture Bill doesn't really even attempt to define that at all. I think the other bill tries to a little bit more. I think it's probably the best attempt we've seen at codifying Howey to some extent. But again, there's still a lot of ambiguity in there, right? I think it says something like, if you're not a security token, and then I think it defines that as like not an equity or note or a business that gives like a financial interest, then you're considered an ancillary asset, and then the presumption is that you're covered by the CFTC. And if the SEC wants to challenge it, then it has to go to court to do that. So that's, I think that's about the most clarity that we've seen. But of course, and I think, maybe others on the panel would agree, there's still a lot of ambiguity over how that would be interpreted, for example, by the SEC, right? It could still be interpreted quite broadly to characterize a lot of digital assets out there as securities.
So, I approach this just from a higher philosophical perspective. What is the rationale for securities regulation, right? It's to address asymmetric information from a centralized entity in the acceptance of outside funds, right? Because of the asymmetric risk that investors in that centralized entity face to protect them from fraud and informing them through disclosure. I don't necessarily think that the community is like advocating, yes, we love the CFTC, yes, they're amazing, we want them to regulate us. I think what they want is someone to regulate them in a way that is appropriate and productive, as opposed to being forced or squeezed into a regulatory environment that does not work and does not apply to them. And I think, unfortunately, that's what we've seen out of the SEC, is trying to squeeze this into a framework that does not work, where in identifying a token as a security, then you have to identify an issuer of that security, and then that issuer is then obligated to do things like mail out physical proxy statements to everyone that holds the token. I don't know how that works, right? So if you want to regulate these things as securities, you have to do the work to allow them to exist, in a framework that's operable. And I think, the counterpart to doing what we're seeing out of the SEC is to create a new construct, from whole cloth at a different regulator, which seems to be the CFTC. Now, the CFTC needs to have some understanding of its jurisdiction there, and if whatever bill gets passed by Congress to do that, if one does, then either it's not going to provide clarity about what is not a security in this context that the CFTC gets, or it could, at some point, in some degree, create a definition or list kind of terms that could be interpreted. So, for instance, like a definition of a digital commodity could be something that is sufficiently decentralized to not represent a common enterprise that has a managerial team, right? So then the CFTC would have to try to figure out, or maybe issue an interpretation on, okay, well, what does sufficiently decentralized mean? The law could also state, the commission shall interpret sufficient decentralization, according to these principles and other things that, it thinks are appropriate. And I think it's incumbent upon, this community to put some hard work and thought into what those things are. Maybe not create that definition themselves, because this would be a long interpretation. But, if someone's going to do this and it's going to be from the government, I think we can lend our expertise into giving some advice about what those statutory parameters could be, what terms could be subject to interpretation, and what that interpretation ultimately looks like.
Right. And one of kind of the fascinating things to me is that this is like a uniquely American conversation, right? We don't have the same question in the UK or elsewhere.
No, the whole securities versus commodities question is basically strictly a U.S. Issue. And I just wanted to touch upon one point. I think I know a lot of focus is on the CFTC, but I've been a securities lawyer for a couple of decades, practiced in the U.S. and outside. I personally think that the SEC is the better regulator, just simply because they have the experience over the last, 70 years of regulating securities markets, both in the U.S. and to the extent that things that happen outside the U.S. actually do touch upon the U.S. They're able to kind of draw the line, not cleanly, but they're able to draw the. Sorry. The CFTC doesn't have that experience, and so it's essentially trying to kind of build it up in a way that doesn't exist currently for it to start to regulate that market, which I think where you already have a regulator that has the staff, the background, the knowledge to do it, I think just using the SEC. I agree with Brian that a lot of work has to be done within the securities regulation to make it applicable to the crypto sector, but I think they have the experience to be able to regulate this market, the spot market for crypto, as opposed to the CFTC. But getting back to your question, for example, in the UK, they don't talk about whether something is a security or a commodity. They talk about whether they have a number of new definitions that they came up with that are all, and the type. Crypto that falls into the bucket of a financial instrument, those are unregulated. But basically, probably about 90% of the crypto market is considered unregulated. The only things that are regulated. Can you hear me?
Is your mic working?
Sorry, the only things that are regulated.
Yeah, I think it's.
I think it happened when you started talking about how good the SEC was.
Right. Yeah, they're pro CFTC. That's why they turned off my mic. The only things that are essentially approximately 90% that are of crypto in the UK is not regulated, and the only thing that's regulated is to the extent that an exchange, for example, or a crypto ATM actually has an office, so has people within the UK, then they're only regulating them from anti-money laundering, counter-terrorist financing perspective, and nothing else. So it's interesting that you can actually have operations outside the UK and offer products and services to UK residents, which you can't do in the US. But that may change in the future. That may not. But yeah, the vast majority of the crypto sector is unregulated in the UK.
And Maya, I'm just curious. Could you speak to maybe broader? Like, is this a question anywhere else? Is this a debate, or just what are your views on even the U.S. angle of the debate on securities versus commodities versus who should regulate?
So what I'm seeing overall in general, like I'm going to zoom out a little bit from the topic and just talk big picture, but we're seeing globally everybody coming out with different digital asset frameworks. So we had on the EU side, MiCA come out, markets and crypto assets. That also encompasses different products in the crypto space. We had different jurisdictions after the Terra Luna situation come up with their own stablecoin legislation. And we're going to see more of that on a global level. But no, I can't speak directly to the securities commodity issue.
Fair enough. Is jumping on that, is one of the weirder things for companies that are trying to operate in multiple jurisdictions just the fact that they do have one jurisdiction or one regulatory framework that they have to abide by in the European Union, but a different one in the UK versus a different one in America versus Canada, Japan. Is that becoming a major issue for companies now, for any company or even decentralized entities that are trying to just offer services or operate a token?
Can you hear me?
Yeah, there we go.
Okay. It's very challenging at the moment because basically, like, let's look at AML law. We see a lot of forum shopping happening globally because different jurisdictions require different thresholds of compliance. So a lot of entities are usually either over compliant or under compliant, and they're basically jurisdiction shopping. And that's happening also with the travel rule a bit, because everybody has their own iteration of how they should implement it. So we see like Switzerland, for example, has a higher threshold than the US. The US, I believe, after 3K, you have to start verifying the transaction.
Yeah. So I just wanted to raise one point, because we're talking about different jurisdictions and how they're taking different approaches. I think this really goes to the point, I think, Brian, you just made this, about how the technology that these assets, products, and services are based on it's just so fundamentally different that you really can't think of it, I think, through a securities framework, right? And so, for example, it's like a lot of it is permissionless and borderless, right? Like how does that technology work when you're talking about different jurisdictions taking different approaches in terms of how they view these assets and products and services, and how they'll regulate them, right? Like I think that just kind of underscores the fact that maybe the securities regime that we have in the US isn't going to work. The fact that it's just not going to be compatible when applied to products that are by their nature borderless. That's blockchain, right?
Yeah, and I think that that's an important point. And if you wanted to develop a quote-unquote consumer protection regime, which is a phrase we're hearing a lot about, right? And I'm still uncertain as to what that means. Because, I mean, look, I was reading recently that when Apple went public in 1980, that the state of Massachusetts banned all of its residents from participating in that offering because they deemed it as too risky, right? Perhaps one of the most important, successful, long-term capital formation events in the world that a state government took a paternalistic value judgment view on to preclude its residents from participating in. So what are we protecting people from? We can't protect them from risk, right? We can try to protect them from fraud. And the disclosure regime that you would think of for a commodity is completely different than a disclosure regime for security, which again involves asymmetric information and trying to elicit the plans and goals of an inside management team. Like, no one wants to know what the pH content is of a soil that a farmer is planting corn in, right? They want to know, if I go and buy this at Safeway, does it taste good? Is it going to kill me, right? So it's like a product. It's the end product, quality that matters. What is this? What does it represent? What can it do? And then you want to create a market for the trading of that commodity that has integrity, right? You want to have a market regulatory process for that. And those are just completely different approaches. And I think the latter fits what this technology is and what consumers need when they're going to try to decide whether or not to own it.
Right. So I guess that's maybe a philosophical question then here. Ijeoma, I know we were talking about this a little bit outside, so not to put you on the spot, but do you have a view on this as well? What makes a better approach, or where should the approach be coming from?
Well, I don't think.
Think you're.
Well, I don't think anything that currently exists is ideal. I think a lot of work needs to be done, but it doesn't necessarily mean that we take everything that we have and throw it away and start from scratch, because that will mean that every time we have an innovation, we throw away everything that's old and stuff. I don't think that's practical. I think that's an approach that the EU is attempting to do, but at the same time, the EU is attempting to put limits on the amount of stable coins that can be issued and circulate within its jurisdiction. But again, your point about it being, if it's truly DeFi, because some things that are called DeFi are not really DeFi. So if it's truly DeFi, how are you going to control that? So I don't think that there's anything that exists currently right now that is fit for purpose, but I think it's working with some of the stuff that we have and adapting it to this new technology. DeFi still remains a question. I think we all are still, trying to figure out how that happens. But there are the things that are not DeFi, which I think the majority of things that exist are not, then those can fit into some amended framework somewhere in the world, and maybe the U.S. should take the lead on that. I don't know. But I think one thing that needs to happen is jurisdictions need to formulate some principles, international principles, and then to the extent that any particular jurisdiction satisfies those principles, they have some sort of mutual recognition regime, because I don't think it's going to work for every single jurisdiction to regulate every single aspect of this market. We came across a similar situation about a decade ago in the derivative market, where every jurisdiction sought to regulate derivatives, and you quickly came across situations where you couldn't, for example, you couldn't clear, something was required to be cleared in the US and the EU, and it couldn't be done at the same time. So there are these mutual recognition regimes that exist for other markets. Maybe they can exist for crypto as well.
Gotcha. So we have about 10 minutes left. I want to switch gears a little bit. Obviously, kind of news of the last few months has been the pretty dramatic collapses of Terra, the bankruptcies of Celsius and Voyager, and other crypto lenders, whatever's going on with Three Arrows Capital. Is this a policy issue that these companies and these projects are, in such a position that a lot of people got hurt? Is it just kind of a market force, or is there some combination of, is there some regime, some regulation that could have prevented, the carnage that we've been seeing over the last, I think it's about 4 or 5 months now? And Maya, let me just start off with you. And
yeah, I think it's a combination actually of both. What we saw happen could have been dependent on the market. I think the past year everyone has had a very risky appetite towards high yields, so it could have happened to any of the other projects out there as well. But then also on the regulatory side, had we had some framework, maybe let's say last year, things would have been a bit different. But we're actually starting to see, like the past month, some recent changes with MiCA, including algorithmic stablecoins. It's still under review, but basically they're saying it doesn't matter what form the algorithmic stablecoin will be in, it'll be encompassed under MiCA, and they'll be required to register. And that's basically a direct reaction from Terra Luna. Now, had that been incorporated a year ago, I don't know, maybe we wouldn't be here today. But also on the US side, there's reportedly a bill being circulated around stablecoins as well, and it also includes algorithmic stablecoins. And again, it's directly related to the Terra Luna situation. So I would say it's a combination of both. I think cryptocurrency, we do love risk, and I don't think that's a bad thing. I think that's why we build incredible things in this space. But at the same time, when you take high risk, there's high loss, right? And that's what happened. So let's see if some of these legislations go through and whether it's going to prevent another crash similar to that, or whether it might kill algorithmic stablecoins altogether. I don't know. You guys?
I mean, I think that's an open question right now. I think it's an open question, certainly in the US. I think there are pockets of the administration that would like that to happen. I think it's uncertain right now whether if something gets introduced in the House of Representatives on this, and if so, if it bans algorithmic stablecoins or criminalizes through criminal penalties and jail time, holding, selling, or transferring algorithmic stablecoins. I'm not sure that that is currently the intent, but that's one of the issues, right, about trying to develop something with a lot of different perspectives and trying to get something done by a deadline. I mean, from a lot of the research and discussions that A16Z has had and tried to put out, we're trying to make sure people understand the difference between endogenous-backed and exogenous-backed stablecoins, under-collateralized, over-collateralized algorithmic stablecoins, and how policymakers can actually view different risks associated with those different features, as opposed to just having heard about algorithmic stablecoins for the first time 4 months ago and saying algo equals bad.
I just wanted to, I think part of what you were getting at, I won't talk about Terra, but like, as far as what happened with Three Arrows and Celsius and Voyager and those guys, I think what you were sort of getting at is like, so I'll caveat this with, we obviously don't know all of the facts surrounding the collapses of those companies, right? And some of it is starting to come out in like the bankruptcy proceedings and everything. But I do think, just based on what we know publicly, that some of the issues probably could have been avoided if there were some requirements around disclosure and collateralization, liquidation, a lot of the things that exist in traditional finance and centralized finance, which is what these companies basically were, but weren't, didn't exist there. So I think regulations and policies probably could have made a difference there.
Ijeoma, do you want to take this too, or?
I completely agree. I think the lack of risk management, I think, failed a lot of these companies. And I think maybe if there had been a regulatory framework that required them to kind of manage, to monitor and manage the risk, categorize the risk, monitor and manage the risk, then maybe some of these companies will still be around today and people would not have lost as much money as they have. Yeah.
So to close out, I know this isn't something we've all had a chance to fully read yet, but on Friday, the White House and several government departments put out a series of reports and what they called a framework for a comprehensive framework for crypto regulation, sort of hinting at what we might expect in the U.S. Maybe in the coming years. These were framed kind of as recommendations and suggestions, not really concrete action. But I just wanted to really, very quickly just get a quick reaction from each of you on what we saw and if that actually answers any questions, shows us anything, tells us anything, or if it's just kind of, a book report that we're all able to read. Let me start with you at the end there.
Sure. So I'll just say quickly, I think a lot of us were really encouraged when the White House put out the executive order back in March. I thought the overall tone of that was super supportive and just very, supportive of this idea that crypto was here to stay, for sure, but also that it was like presented an opportunity for innovation in the U.S. to lead. And I think the framework, the fact sheet that they put out last week, felt to me like a lot more skeptical. And it's unfortunate, right? Because I do think, to what we were just talking about, that was a result of all of the things that you've seen happen like in the last 6 months. But I would stress, right, that a lot of, this is these are reports that the various agencies and government bodies are putting out, and that's all they are right now. So I think there's definitely still an opportunity for, us to engage on it. And these aren't actual regulations or policies yet, so there's still a chance to educate and get involved.
Yeah, that's a great point. I would encourage everyone to do that. To the question, this was not a comprehensive policy framework, and that's not a criticism of it. It could not be a comprehensive policy framework because some of the most important roles in this space, I think, are going to be the market regulatory roles of the SEC or CFTC or someone else. And the White House cannot tell independent agencies what to do. They are not encompassed by executive orders. They may have participated through FSOC, the Financial Stability Oversight Council, in some of the recommendations here, but none of those reports, especially from Treasury, can tell SEC to do this or CFTC to do that. So this couldn't be comprehensive. But secondly, I think in order to have a comprehensive framework, you have to do a comprehensive analysis of the benefits and the risks, and I didn't see that either. But lastly, I don't really think that this moves the needle. I think that it may inform some potential pieces of legislation that come from the White House, but I think that those are basically moot after November, because I think there's going to be some kind of change in the power structure of Congress that creates a different dynamic. So, what is their ultimate impact, regardless of those, flaws, in my view? I'm not sure it's actually that significant.
I agree. I was going to say it still doesn't fill in the gaps that exist at the moment. So.
Well, I think that the real action is going to come from Congress, and I think that's where we need to concentrate our efforts. But the problem with Congress is a lot of senators and members of the House of Representatives, they don't understand this market. And so education, as you mentioned, is key, because what we don't want is for them to put in place legislation that will actually bind the SEC and CFTC in a way that will be detrimental to this market simply because they put in place something based on a lack of understanding of the market. So I think engagement of this community with members of the House of Representatives and the Senate is key in order to ensure that whatever comes out, probably not this year, but whatever ultimately comes out is fit for purpose.
Awesome. Thank you all. Unfortunately, it is time. I want to thank all of you for joining us today, and thank our panelists again. And thank you to Messari for hosting us.
Thank you.
I think that's us.